Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market finally gave way to some sharp declines late this week as interest rates finally moved up to a level that scared investors. Fed heads have been talking about the strong economy, and Chairman Powell was out, and he might have delivered the killing blow to this bull market leg that we have been seeing. As he said, this is a remarkably positive set of economic circumstances, and he said the cycle can continue for quite some time, and they can be restrictive for a while. Well, they still don't think they're at neutral. So if that means that they're going to get restrictive and stay there for a while, well, you can put two and two together. Oil prices surged early in the week, and that held the stocks up as the Dow got a pretty good lift from energy stocks and other stocks. But then the oil market gave back some on Thursday as the Saudis and the Russians came out and said they were going to increase production. The president has been asking them to do that because oil prices have moved up sharply, well over the $76 number per barrel, and now they seem to have quieted down. We actually think that we're going to get into an oil pullback here, and we'll tell you more about that towards the end of the show. Even with the NAFTA new agreement called the USMCA, trade issues still do continue as the war of words between China and the United States goes on, them criticizing Vice President Pence and a speech that he just gave. And the trade deficit did widen sharply this week as exports with China did fall off. So that's bad for U.S. manufacturers, exporters, and it just shows you that the negative effect might actually be a negative effect for the United States. We have discussed the risks recently about as we get into late September through December for the stock market. That's based on our analysis. The Russell 2000 made its high at the end of August, now down some 5.5% from that high. Quite a decline in just a short period of time. Well, rates went up, as we know, and we're in a period of QT, quantitative tightening, where the Fed is selling off their holdings, though at an incredibly slow rate. And the third tier of the market, those Russells, are very high borrowers. They got saved by the great experiment that the Fed put on over the last 9 years. But now there's a lot of zombies there in that Russell that are affected by these higher rates, similar to what we know about the emerging market countries who have their loans tied to the U.S. dollar. The stronger dollar hurt them, the higher interest rates hurting or will significantly hurt those lower cap stocks, and they're the ones that led to the downside. I've made comments in the last couple of weeks that it was suggestive of something happening that was serious and that the stock market could decline based on that bleeding into the broader indexes, and that really looks like what's happened right now. We think that the break that we're seeing now in the S&P 500 and the NASDAQ is a short-term breakdown. Again, we're going to show that at the end of the show and in the short-term view. And this comes for us, as our analysis did say that a decline was likely at this time. We are calling for a correction in here, not necessarily a bear market, because we think that we might get some better time from late December into the early part of the year. But right now we're looking for 10 to 15% on the downside in the broad indexes in this decline that we think has really just started. Let's take a look here at the 60-minute chart of the S&P 500. Excuse me, and you can see that what happened this week is that early in the week the market held up. It was looking like, well, pretty much normal. But if you look there at the high on Monday and the high on Wednesday, we have that designated as a double top on our longer term charts. So that says to us that when we break significant lows, that like happened right over here on Tuesday overnight, that is signaling a breakdown. And I'll show you that on the shorter term daily charts. On Monday, Canada announced this new NAFTA deal, and Musk made a deal with the SEC, and Tesla jumped. And that gave the market a good lift, but you could see Monday, only the second hour is where the rally was able to go to, and then it started to break. On Tuesday overnight, Italy threatened to leave the euro, and their budget is way out of whack with what the Eurozone, Brussels, wants them to have. Later in the week, as you could see here on Wednesday, they said that they have made some concessions. But then, they continue to speak about leaving the euro, and that has pushed the euro down and helped the dollar to move up. Also, higher rates have helped the dollar to move up, but we think that's pretty much over with also. ADP came out on Wednesday, made everybody think that the numbers would be strong on Friday. They were not, really. See that big shooting star right there on the 60-minute chart on Wednesday morning? That was the high for the week, equal the high there on Monday, and then it started to sell off hard. After the close on Wednesday, Fed Powell came out very hawkish. He says they're a long way from neutral and can stay restrictive, and the bonds moved down sharply. The bond market really went into collapse this week as these interest rates absolutely surged. Here you get a minor recovery here before the opening on Thursday as the bonds had a little bit of a bounce, but look at how that selling came in. Thursday and on Friday, just significant selling. We haven't seen those kind of declines in quite a while. Payroll numbers came out only up 134K versus over 200 estimate, but the previous months were adjusted plus 80,000. So that was kind of a push, right? But the U.S. unemployment rate, 3.7%, and that has to be just flashing in front of the Fed. The lowest since 1969. It's 49 years since the U.S. has had a number that low, and yes, you could thank the Fed for that, and the false growth that we have in the economy based on their interest rates and them printing massive amount of money and monetizing that. All of that caused where we are right now, and before you know it, we could get some pretty good wage increases, and that would even scare the market more, but that might be what the bond market is responding to here. Atlanta Fed still says Q4 growth is going to be 4.1%. When the bond market got a load about that, well, they didn't like that and pushed it down right now. Here, late on Friday, middle of the day, bond market is down almost a full point again on the 30-year, and the stock market rebounding from the S&P being down around 35 to down around 27 points on the day. That is for the futures that we're looking at right over here. So you can see here a picture of two different markets as Monday through Wednesday morning it held up, but then somebody flipped the switch and everything changed after that. Pretty good, clear picture of what's going on, what happened in the markets this week. For the stock market, what we had was the S&P 500 losing about 1.25%. That doesn't seem like very much. It feels a lot worse than that. The NASDAQ, however, down about 3.5% right now, and the Russell down over 4%. The Dow Jones Industrial Average, however, just eking slightly to the downside, pretty close to even, as it had a really good early part of the week, better than the other indexes. And Boeing for the week still up about 2.8%. That's really helping it. And other stocks that gained over 1% on the week: Verizon, Pfizer, CVX, and United Healthcare, all of those gaining over 1%. So that really helped the Dow. And it's interesting how the high caps seem to be a place where the investors are feeling safe right now, and the low caps are the ones that they're just absolutely bailing out of. I promise you that if this scenario continues, where the bonds keep falling, interest rates keep going up, and the weakness in the lower tier of the market continues, that it will bleed into these broader indexes in some kind of a big way. And I've seen that movie happen a lot of times. 30-year bonds really in collapse mode, down over 3 points for the week. 10-year yields soar 18 basis points on the week, up to 3.24%. And it's interesting, I read this in some article during the week, that the stock market really started to falter when real interest rates got to about 1%. Real interest rates being the 10-year rate minus the inflation rate is about 1%. And, we haven't had that in, like over 10 years. So that's a situation where we look at the inflation numbers going up potentially later, and that would mean that interest rates still have to go up higher, and an environment that is becoming very competitive for stocks, where yields are really low and in the stock market, and yields are starting to go up in a much safer bond market, and we have much safer returns potentially in the bond market, and we have this condition which really sets up problems. Now, interest rates going up, that favors money coming into the dollar. It had a week where it was up about 0.75%. It's not huge. It did okay, and we don't think that's going to last very long. Gold market was up $9. Now, that's a good performance based on the higher rates, based on the dollar going up. So we actually think that gold has got a short time here of kind of fooling around and finishing a little corrective period. And then we think gold is going to do a lot better. And we're going to have some special videos coming up on that for our members once we get into this period where we think it really favors gold. And the oil market up about $1. That's still after a big down day on Thursday. Monday, Wednesday up, Thursday down, up about a full dollar, a little better than that for the week. That is everything on the opening segment, and as usual, we're going to bring you the best and the worst for the week. All right, a couple minute announcement here. There's some coming changes in this show, the Market Week show. There's no changes to content right now that we're planning, and it's still going to be free to you. It's how I give back, essentially, and connect with the trading community after 44 years in this business. And I share my knowledge as a trader, analyst, and coach. And that's what I do here. It's how I connect with you, and of course, it's how I tell you about our content in here. What is changing, however, is that we're asking those of you who enjoy and benefit from what we share on Market Week to become members at askSlim in the community by signing up to level 1. It's completely free, and you'll get full access to Market Week and also to the archives, which you normally don't if you're not a level 1 member. And if you're already a member, don't worry, nothing changes for you. In the next couple weeks, what's going to change is that full access to this show will only be for level 1 members, free level 1 members. And then on YouTube and other free areas, you will only see the opening to the show, and you'll then have to be a member to see the rest, a free member. Why are we changing this? Well, when we offer this and when we can connect with our membership, it allows us to communicate with those of you who are interested in the markets and interested in our content. It's a convenient way for us to deliver to you new product previews and things like that, special videos that are in the level 1 section, and important updates to what we do. So it's much more, and much more is coming that you will be able to see, and you'll be able to access it right on your askSlim Level 1 dashboard. It's easy. Just go to the askSlim website, sign up right now for Level 1, free membership, and that will bring you this complete show going forward. So those changes are going to come in just the next couple of weeks. All right, so let's take a look here at the best and worst for the week as I pull up my notes in here. I actually don't have a lot to share with you about the best for the week. There were a few stocks that had made gains, and one of them that was pretty significant on the upside and really some excellent news is that Eli Lilly, they had been running a trial on a new diabetes drug, and the results were really good, and that's really going to be great for some of the people that are suffering from diabetes. Hopefully that product will be able to come online really soon, and this has been a stock that's done well. This is a good one to illustrate our cycle analysis that you can see on here, and those arcs that you see on the bottom, those are called cycle brackets. And what they do is help us time and identify the rhythms in the market. Cycles are the heartbeat of the market, the rhythms that go on in the market. How they resolve themselves from the ideal to the real is what we illustrate on the top, right on the bars of the chart. So if you look, you'll notice right in here that this dominant cycle has all three of them do have that 3 minor cycles inside, and you can see how we defined the 3 minor cycles right in here. So each of those are very clear. You can see that rally that's coming right now is actually in the 3rd cycle. 3rd minor cycle of the big one. And what usually happens then is that it gets tired and it goes into a correction in the 3rd cycle. You could see this one over here, and you can see this one over here. They corrected and came down. Well, this was some really good news, and somebody knew it was coming out because the stock gave you this little diamond formation right there, and then exploded to the upside. We think it's got maybe a little bit more, and then a correction down into December, in alignment with what we think for the stock market, but then we think it's going to explode to the upside. Again, we hope for an opportunity to buy this stock somewhere around the 106 number, where that intermediate 23.6% fib is, and I think that a good stock will remain a good stock when you look at Eli Lilly. Another gainer for the week, really on no news that I could see, is Schwab, SCHW. This, of course, is a broker, and when you look at this pattern, can you tell me that, you can get excited? Up 5% on the week, and I say, well, pretty much like Elvis would say, don't be fooled, because I think that this is a stock that's ready to break in a big way. I think that the issue with the competing commissions in the brokerage industry is a really big issue, and this looks to me like a stock ready to be in some big trouble. So see the head and shoulders that's formed in here. Cycles form head and shoulders, and I have a whole video on how that happens in our cycle analysis workshop, which is made up of 20 video modules. You're going to learn a ton when you take that workshop. So this is a great look at a head and shoulders top, the cyclical patterns, and up 5% on the week. I don't like it. The refiners, they gained on the week. PSX up 4%, MPC up about 3.5%, Valero up about 2%. And I don't think you can chase these either right now. This is one of the better of the patterns, and you can see it rallying in here. And there's a potential, you note the 34-week moving average and how that gives nice support. There's a potential that the low has been seen in here, but this is a negative configuration, and the odds are that there's no big upside in here. You could see that low is lower. It's likely that it's going to pull back one more time. Oh, if it doesn't, then it just kind of ticks up a little bit more. I think it's going to roll over in a much more important way. This is not a great pattern in there, up 4% on the week. They liked it when, that oil went up. It essentially helps the refiners' margins unless they're short inventory, which, usually they're not. So in this case, their MPC is another one. And you can see it's came up and hit that fib target zone right in here. Fib target zone is an extension off the previous cycle, and that's the 78.6% and 100% fib extensions. It's often the location that a rally goes to, and you can see it got there. And to see these two tails there, those wicks, it's finding resistance in that area. And similarly to what we see when we looked at PSX, we think this is going to top in here and decline into December. So gains on the week, but we don't really like it. And the next one is Valaro, and you could see this one, you can see this rising phase has had a lot of opportunity for it to rally, and it didn't get to a new high. If you look at these positive phases in here, they all move to new highs easily. This one didn't, and that's a problem. So we believe also, and you could see this one bottoms in December, and that says to us, you don't chase these stocks. I think that they did too well this week for the situation and for their patterns, and overall, I think that that group of stocks looks to me like it's got a pullback to go on here. Don't chase those. I'm not really bearish on them. I'm just saying that this is not, I don't believe, the time to buy them, even though they gained on the week. That's all I have for the best of the week, and I've got more to show you in the worst. All right, worst of the week. Got a few more stocks to show you than I did in the best of the week. A GoPro, not a stock I look at a lot. The stock really got annihilated. Fantastic products. It's just amazing that they can't compete that well with all of the other type of products that you can have to shoot video. I think that their product of having a camera on a drone that follows you as you do things is just absolutely amazing. And their products are really high quality, but the stock has not done well. That's, when you have a good product and can't figure out how to, to monetize it, well, then you've got problems. This is a good example of a target zone, again, that got hit and was meaningful. This is an unusual condition where you have an overlay of a fib target zone on top of a resistance zone. You can see it really mattered. The stock got up to close to $8, $7.50, and then had this big down week. So it had a big up week in there, and that big up week was a result of the new product line coming out, and the big down week right over here is a result of the new product line coming out. So they weren't, they got excited about it, and then they're not that excited about it, and that would be a stock that just doesn't look good. You can see our projection in there. It's not favorable at all, and we would expect that the stock could be under $5 again before the end of the year. So it was down 16% on the week, and the worst stock. Tesla, this guy cannot keep his mouth shut. I swear to you that, we talk about the narcissist that runs our country. Well, this must be like a narcissistic contest going on for high-profile people. This guy cannot keep his mouth shut and can't get out of his own way. As he comes after he makes the deal with the SEC, in which he has to step down as chairman of the board, he comes out mocking the SEC, and investors hated that, and the stock fell off. Now, this is interesting because this is really a bottoming area in here, and the stock got up into the sell zone just beautifully and then pulled down really sharply. So it falls from 315 down to 262 after that Fed announcement of the SEC deal, and this is a buy area for me. I think it's highly likely that for short-term traders, we're going to see a bottoming occur in here, and then we're going to move up over this 305 area again. But then again, I think it's a sell. I don't think it's anything spectacular. But this is, I think that investors are going to start looking at Musk shutting his mouth and also the fact that other people might start running the company, and that might be what this stock would need to get a lift again. Down 12% on the week, a bad weekend here. Retail, of course, was really strong for a long period of time, and then it started to back off, and it had a rough week this week. I'm going to show you 6 retail stocks right now that were in the category of worst of the week. We're going to start out by looking at AEO. A lot of these didn't have any news. It's just that investors got in them, and then all of a sudden the pattern started to break down, and they got, I think, crazy in here, especially in these teen retailers. Look at this. Now, this is a bad pattern. What makes it bad is that, let me just lasso this for you to see, is that it has broken down under that last cycle low. So you look over here, you can see where the cycle low was due. It came a few weeks late. Then it rallied. It did not make the sell zone and broke underneath this key level. So the key level here is where that cycle low was, right here, and that breakdown right under that level is negative. Now it gets down to the major 50. It could bounce from here, but we see the stock falling to 20 here between now and November. So that's a bad looking pattern, down 11% on the week. No news, but that is a intermediate breakdown. Decker's, DECK, you can see this stock is getting close to that level right over there where that low was. So if it gets under that level right there, it's going to be a breakdown. You see we have it coming down into late October. And look at the double top that formed in there in Decker's. So that's a bad looking stock, down 8% on the week with still some time to fall. Skechers, SKX, this has been a stock that's gotten devastated. We have a target zone down over here under $21. It's now trading near 26. We thought it would continue to fall based on these patterns. It's getting near the point where it could bounce again, and you can see our projection. But we think that sometime by January, you're going to see this stock threatening the $21 number, and we think it's quite negative, and that would be a stock that, given opportunities, we would be a seller. Best Buy, another stock that got into the corrective zone. Now, there's a lot of cycle analysis on here. On this weekly analysis, this big cycle right over here shows up in these blue or light purple cycles up on the top. This intermediate cycle right over there shows up in these black ones. And then there's also another minor cycle acting in there. And the minor cycle is kind of pushing down and bottoming right now. So we think it's going to get a bounce back, but then you can see that our projection is for it to come down to about 67. It's now 72 between now and, yes, December, which so many things are pointing to. So big selling that's going on in there, and we consider this the stock to sell given some opportunity. The next one we're going to look at is Under Armour, UAA. This is a stock that broke down about 3 weeks ago. We said that when it broke down, it was very likely that if we get a bounce, it would not last and fail. And you could see that happening. This points to a low in late October, and we wouldn't be surprised to see that it gets somewhere just below this level, about 1840. So there's still some room to fall and time to fall in Under Armour, down 9% on the week. Best Buy down 7%, Skechers down 7%. And the last one in this category we're going to look at is Amazon. We've got what looks like a double top right in over here. Now, we thought that 1 week pop in there was the rally. And now we've come down and taken out that low. So I got to tell you, this creates a confusing situation for me. That star right over there designates cycle lows on this chart. That's how I designate them here. And now that it rallied and sold off as much as it did, my question is, did we see the whole rally? And are we now in for a decline all the way through December? Or will this then get saved and rally? And this was actually the low occurring right now. But based on what we see in the stock market, which really says to us that declines could really come through December, our guess is that this is what's called a left-hand translation. In other words, all of these patterns in here show you long rallies and tiny sell-offs. The little sell-offs are the yellow zones. If this is a breakdown early and it looks that way, then it would mean that this would turn into a yellow and then red zone right now and be pointing to very significant declines over the next more than 2 months. I consider this to be a really bad pattern right now. We're going to have to let this play out, but I think Amazon could be telling us the condition of the NASDAQ when we look at that. So Amazon down over 5% on the week on what looks like a pretty scary pattern to me. Airlines, they're the last group that we're going to look at in here, and they were down on the week. American down a solid 10%, Delta down 7%, United down about 4%. And these all have some downside risk. I liked this group, and I liked it until the oil market started to really pop. They tried to rally, and now they're starting to look kind of sour. So their upward flight really looks like, well, it's in a descent at the moment. Let's take a look at American Airlines, AAL, the big down one for the week. And you're going to see in here the synchronicity that we have in timing. So this decline right over here that we suspected would go out into December, it's already been very steep. So our projection down to that 78.6%, that's too optimistic. Actually, it came through supports, as you can see right there this week, and now it comes all the way down to past low, or like right down over here. So this still looks to us like there's a lot of time to fall into December in American Airlines. Delta, we'll look at that one and look at this big downside week. That's, of course, on oil. This points to end of November, beginning of December, before this is over with. So again, we projected it down to about that 61.8%. I'm just going to activate that trend line and say that now it probably projects down to that low based on the early decline there. So Delta to us looks bad. Another reason to believe that the market declines into late November, early December. Sorry about that. And the last one we're going to look at in here is United. This was the strongest one. You can see in here I've got all cycles aligned in here. Delta, American Airlines, and United. And you can see they all point to late November or early December, right in that area where I think that the bottoms are going to come. So this is a nesting that we call right in there, where that green area is in time, where we believe that bottoms will come. Late November, beginning of December, this stock very likely to decline down to that 34-week moving average, which is curling up towards that 50% extension. That's under $80 before it then has probably any chance for any kind of rally. Note the double star, evening star, those two hanging men. And you can learn about candlesticks. I have a very great video in our list of videos. You know, in our tools for text videos for chartists, we have 74 videos in there that talks about all kinds of things about charting. We have one on my 22 favorite candlestick patterns. What's different about that video is that I go over how the Japanese interpreted the psychology in each pattern, and it really helps you understand that it's not just lines on a chart. There's much deeper meaning to them. You're going to want to watch that video if you're a member. You need to be a level 2 member or higher to be able to watch that video. So that's it. Everything in the worst for the week. We're, of course, going to show you what we think is going to happen in the next week when we move into our short-term view. All right, short-term view for the coming week. I do this every week. Usually I'm accountable to what I said the last week, but I was on vacation. I didn't say anything last week, so I had a nice time off, and now I'm excited to be back with you. I want you to remember to sign up for that level 1, because this Market Week show will not be available in its full form to you as we're changing that in the next couple of weeks. But you'll see it for free still. Follow me on Twitter at askSlim. You also should follow me on YouTube, as this will still be up there. And also we will, of course, be putting up other videos, as we always do, on YouTube. So follow me on YouTube at askSlim. You like this video, give me a thumbs up. It helps us with our standings on YouTube. So love to hear from you also by going on YouTube and putting in some comments on there. Do you like our charts? Do you like what you see here? This is an analysis like you have, I'm sure, not seen from any other analyst out there. Our level 4 members get this, and you can become a level 4 member and try it out. If you're a level 4 member, you're going to get all of our charts for the Thinkorswim platform. That's 80 of the best traded charts, indexes, all of the 24 futures indexes, and 56 of the best traded stocks and most optionable stocks. You'll get our rankings on them in 3 different time frames. It includes our option bias indicator, which is just a fantastic indicator. You'll also be able to see our a great indicator that shows you when things are very overbought or oversold. We put those on the charts also. You will get our trade setups, which we tend to put out a couple a week, and we've been just outstanding at those recently. And you'll get our stock index report. All of that, wow, charts, all of our videos, 300 plus, our rankings and trade setups, our stock index report, 1 month, try it out, $73.50. Send me an email to slim@askSlim.com or write support at askSlim.com and ask for the level 4 trial. $73.50. Don't like it? Cancel it. You won't be billed again. And I think that it's an unbelievable offer, and the amount of learning that you could do in 1 month is incredible. So send me that email and sign up for that. All right, so let's get into the short-term view for the coming week. We look at the 5 major segments of the markets in here. We look at oil, the dollar, the gold market, the bond market, and the stock indexes. We look at daily charts because they have our cycle analysis on these futures or indexes, and that is what our short-term view is made up on those daily charts. For people that are interested in shorter-term trading, we have a lot of videos on that also, plus our 2-hour charts that are included for the futures are phenomenal. They really let you see how to direct your positions for the shorter term with some great indicators on there. So you're going to want to take a look at that also. Let's take a look here as we look at light crude. Now, we're in an area of what I consider to be correction. The rally definitely got higher than I expected, but now we're in this period over the next 2 weeks of a likely correction. We're normally project out in like a week, but because 2 weeks from now is where this corrective period ends, is where I'm really focused on. Right around the 3rd week of October, we're looking for a pullback in these next couple of weeks. I want you to note that see this green arrow back over here, that is the where it turned positive on the slim ribbon right at that point, and that momentum has been helping you as it continues to move up that 13-day moving average. That's what is important about this, is that it really showed you the strength. It continues to be in positive momentum, and we don't think that there's a big decline coming. Maybe the 2 supports that we're looking at now are about 73.40 and 71.90. Right over here is around 71.90-ish or so on that 38.2%. This 23.6% is around 73.40. So those are first areas of support in here, and we think we're going to be down, maybe choppy down over these next couple of weeks in light crude. You can see this other yellow area right over there, how nicely that worked. Here's the other area, corrective area, and you can see how they just absolutely bring corrections. Beautiful period here to expect a period of risk, and that's how we have that labeled. The next thing that we're going to show you in here is the dollar, DXY. So the dollar gained strength, of course, on the much higher interest rates. And even though we think on an intermediate basis the dollar is going to suffer fairly soon, on a shorter term basis, it doesn't quite look like that yet. We think we're going to pull down in here, and you can see the support in the dollar between 95.25 and 94.95. And we see that in the next 1 to 2 weeks, and then another rally coming. So we see only minor pullbacks. That might be in line with a bounce in the bond market. that is likely to happen after this deluge of selling. But we don't think it's going to be a big decline. We're going to call it a down week. We'll call the light crude a down week. We're going to call the dollar a down week in here. But all of those, both of those, really kind of on the minor side. We're also looking for the gold market to complete a corrective period in here. Now, there's a lot on this chart. There are the gold intermediate cycle right over here, the gold it's a larger intermediate or dominant cycle right over there, and then you have the smaller ones right over here. And you can see the smaller one gave you a little rally here, but then it turned negative, and then you got a rally in here, and now you're trading up this, kind of upward channel, really been in a range. We identified these support and resistance. It's continued to be support and resistance at those levels. And we still think we're stuck in there. Once we get past this corrective period here, early part of June, this looks like late part of October, right in there where this nested area is. Right there you can see the GDX. It also bottoms in that same time period. We're in an area where we're kind of choppy, maybe a little higher, then maybe a little bit lower, but then something much different the conditions are going to change as we get into November. So we're just going to call a narrow range in here, 1220, 1182, that's about the zone. If we get a little more dollar weakness as we expect, we might get a little pop in here. Momentum is neutral. See that little blue arrow? It keeps coming and going right now because we're just stuck here in neutral on the momentum. That's not giving much away. We just don't think there's much of a trade in there right now with a real nice opportunity coming. So the bond market /ZB is the next one we're going to look at in here. And this has just been a devastation. I mean, it's gotten through any supports that we had in here. It got extreme oversold on our option bias indicator right here. It bounced for a day and a half. It got extreme oversold on our option bias indicator here 2 days ago. It hasn't even been able to put on a bounce yet, so it's even more oversold. What we think we're going to get is kind of a rally and then a sell-off again in the next week. So bounce, roll over, and then make a bottom, and then an important trading bottom formed in about a week's time. We're going to call it a small week because what we expect to see is up-down, a bounce in here and then another decline, which really would give it a small week. And really oversold condition, so momentum clearly negative. See that red right there, that little red arrow? That designates when the slim ribbon gave the bear signal, the negative momentum signal, and you can see that. You really have to have slim ribbons on your charts because it really can hold you into trades much longer than almost anything I know. That is a real good look at what we think is a capitulation time period going on now, and we think that's going to end. We'll try to get a rally, and it won't be able to hold, and it'll sell off again. But then a better bouncing period, and we think it's related to a stock market that's ready to give a ton of ground on the downside. It's already looking that way. Let's take a look here as we look at the S&P 500. We made a case that we had two cycle patterns that were fighting against each other, and that was likely going to bring a period of chop, and we see that right in here. And then they were aligning on the downside, and they point to 1022 as the bottom of this decline, time-wise. So we're going to look for a decline in here to continue. Those cycles being in phase and having broken down, you can see this note right over here, cycle support breakdown negative. It broke underneath that level. And for the first time in a long period of time, the upward momentum is gone. Upward momentum is gone. It's now neutral in the S&P 500. It is neutral in the NASDAQ, about to turn negative, and sharply negative in the Russell. So this momentum, which turned positive, and you can see where it turned positive right over here, which took you from 2780 all the way up to the high in the market of 2940, 160 points following that slim ribbon up the whole way, momentum strong, it's now given way. Our market condition indicators are starting to erode also, though they have not turned negative yet, except in the Russell, which is very negative. We're looking for a decline. We're going to project 2850 to 2817 right down over here sometime in the next week and a half, and that this decline could potentially turn into a free fall condition based on what we see in here. Next 2 weeks has a lot of risk. We had identified much higher risk beginning late September through December, and you can see that it is really coming in right now. Sellers very aggressive, and like I said, there is competition out there when you look at the interest rates. Lots of reasons to believe that this 9-year bull market is at least taking a very significant rest, and prices could decline pretty sharply as we see in here. That is our short-term view for the coming week. I hope you found that fantastic. Remember, you're going to need to be a level 1 member to see this as we move forward, so I want you to definitely subscribe to that. And try out our level 4 membership for the Thinkorswim platform. Man, oh man, we're going to give you so much to look at in there. You're going to learn a ton. I'm sharing 44 years of work with you in that. And make sure you take a look at our workshops for $297. I have a 6-video workshop called The 5 Essential Building Blocks to Successful Trading. I share a lot with you about the psychological aspects of trading and go through a whole series of things in there which will give you a great perspective of how to approach the markets in ways probably a lot different than you have before, and ways to identify challenges that you may be having personally. So I really suggest you go look at that. That's the 5 Essential Building Blocks to Successful Trading. And also you'll be able to look at our cycle analysis workshop, 20 video modules that teaches you how to do what I do here. Please do give us a thumbs up for this, and I want you to be really careful because it is so crazy out there. And we're always wishing you great trading.
Well, I'm going to the city and I'm going to do a steady show.